Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Marty strikes again. Thanks, Marty. And how are we doing in YouTube this morning? Thank you, Stephen. Thanks, Willards and Ambiance. Appreciate it. Thanks, everybody. Thanks for visiting the Trader Lab today. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. This stream is about educating traders. It's really an advanced trading education program for traders who want to go beyond simple indicator-based multiple time frame buy, sell, red light, green light processes. If you're as a developing trader, we all kind of walk in the same shoes. We go down certain paths, and we have beliefs that we're doing the right thing, and the right thing, and it may be the right thing for you. But here's something to think about. If you perceive you're doing the right thing, but it keeps breaking down, and your perception of trading is it's a solution of indicators and timeframes, and you have a belief, and you keep pursuing that belief, you're going to continue getting the same result. Now, why would we continue doing something, and where might these beliefs come from? In the outside world, there are certain things, when I mean the outside world, the non-trading world, there are things that are truths. And we follow those truths, and they work outside of this environment. But this environment is completely different than the environment we live in. And what we're trying to do is fit this environment into that other environment. When you come to this environment with beliefs that have worked for you, it is just logical that you're going to just try to overlay those beliefs here. So it's a belief that a software package that has indicators and that you get the right time frame and the right indicators, and now you have an ATM in the basement. And I'm going to suggest, unless you do have an ATM in the basement, that belief might be dysfunctional in relationship to this environment. So what makes this environment different? It is a gaming environment. And what is gaming? Gaming is a statistically based process, and our comparison is a successful business model, which is a casino. Now, everybody wants to think they're not gambling, but the reality of our business is it's not so much gambling as it is gaming. And gaming, you might say, might be gambling, but think about casinos and how they operate. The house only plays games that have a statistical edge. The house also participates in an environment where they have no control over the outcome of any individual hand of a specific game. The difference is they only play games that have a statistical edge that favors them. So if they consistently apply or play the game, they then anticipate over a random distribution of outcomes of extracting the dollars from the gamblers. And that's really the business we're in. So we're not going to try to reinvent the wheel. We already have the wheel. And that's based on gaming and how casinos operate. And think about it. They pay the gamblers. Now, we don't like to lose, right? Of course not. And we feel like it's a personal failure. Do you think that casinos quote, feel or are attached to an outcome? Would they know they have to play the games and pay the gamblers? And by the way, the cocktails, and give you the ticket to the buffet so they can extract the dollars net after all the expenses and still make a profit and build larger casinos? Think about that. So is your belief that you're doing the right thing, which is just keep waking up in the same place, even though we have intermittent winning trades, which keeps us on a path that might not be sustainable? Is that you? This is why the Trader Lab exists, to help you differentiate between the fantasy and the reality of this business. And that's why it is a advanced trading process for developing traders. And that means the Trader Lab community made up of like-minded traders who are looking to differentiate their outcomes from typical retail trader behavior and failure rates. It's about Bookmap using a high-tier order flow tool and understanding market mechanics, how the market works, why it does what it does, how you might get in alignment with it. And it's also based on structured trades and a library of webinars that I've shared in the Bookmap Discord Trader Lab community that are available to all of you at no cost. So there you are, and welcome to visiting the Trader Lab today. Hope you find this useful. By the way, Stephen or Dan, if you are in the stream, could you please post yesterday's stream in YouTube? It is a template stream to help you understand market mechanics. And every day I go through certain processes that are consistent. If we accept that the market is random, in other words, uncertain in every moment, then just like the casinos, if we can accept that, and yesterday was a top-down approach. In other words, how do you prepare for trading for the day? What levels are important that we should be looking out for? What intraday developing behavior not only can we anticipate, but how can we participate? So if that link is available, and it should be out there in YouTube world or up in the chat from yesterday, please post the link for our visitors in YouTube. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, please grab a pen and paper. I'm going to give you a couple quick statistics. Remember, we're not into gambling. We're into probabilities. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Remember, please, this is not a trade calling room. This is for educational purposes only. Grab your pen and piece of paper. Now, I got a couple important things, a couple messages, a couple little notes, a couple tidbits. Let me see if I can get that rolling here without hurting us. Okay, you guys know Black Friday is coming. Do not miss out on this opportunity. Bookmap can be very generous with Black Friday deals. And if you're in the U.S. or elsewhere, you know Black Friday is the opportunity for all the things you ever wanted. But if you ever wanted to try Bookmap, get your hands on Bookmap, this is the time to do it. In my opinion, I would not trade without a high-tier order flow tool like Bookmap. Wouldn't even think about it. And it made a tremendous difference for me because as you guys know, I've been trading for 45 years and I could not read the dome. Just wasn't something I could process. So when Bookmap became available, it was a key piece for me. And yes, I had to learn how to use it. If you're looking for plug and play, this is high tier. This is what serious, long-term, potentially career-minded traders, it's a tool. And like all tools, you got to learn it. But the Trader Lab, we focus on order flow, and there's a lot of additional education. Be sure to check bookmap.com or this stream or other streams. Now, I will not be streaming on Friday, but you've been advised. Do not miss out if you've been thinking about checking out Bookmap. And now there's one other thing, and you have until the end of the month, and that is the Blue Jacket winner will receive. Now, this is for the Bookmap Academy, which is there's no cost for this. It's mentoring and coaching. And not only and you need to submit any examples of how you trade, setups, trades that you did, and get some coaching, get some mentoring. And the winner will get 3 months of Global Plus with stocks or futures data and a month of Discord Nitro. But here, I think, is the real sweetness to the whole thing. One-on-one coaching with me. And this is something I don't do too often. I do coach individual traders. And of course, if you're interested, you can always reach out to me. I always try to help traders, though it's very limited. I just don't have the time since I'm a full-time trader. And then, except for this. So if you're interested in coaching, this might be an opportunity for you to check it out. Win the blue jacket, get 3 months of Global Plus, and of course, a personal, individualized coaching session with me. There. Hope you got something out of that. Thanks for your patience. Let's jump into the market. Now, grab your pen and paper. I'm going to give these statistics. Why statistics? It's called edge. Everybody wants an edge or should be thinking about it. This is not a video game. Now, I'm not saying you can't play a video game. It's not my business. It's yours. But if you're career-minded and you're looking at this, can I create a business? Then you need what's called a business plan. What is that? Trader Lab can help you develop a plan and an understanding so you can differentiate yourself from the outcomes of most retail traders. I have a saying that I coined. It's called think like a retail trader. Don't act like one. Here's the statistics. Grab your pen and piece of paper. So we opened higher inside of yesterday's range. Now, these are just probabilities. You got to understand probability and prediction are very different. Nobody can predict anything in this business. Now, I think we are led to believe we can, but the reality is casinos can't predict the outcome of anything other than playing a game with an edge. How can you predict something? Do you think they might have figured it out? And do you think they might have skipped the hands or the play where they actually pay the gamblers? Well, we can't either. So we have to accept that there's cost of production and overhead in any business, including this one. Think about it. Write that down. Okay, probabilities. There is a opening higher in range and past performance not indicative of future results. You got to bet these for yourself. There's about a 98% probability we'll take out either the first hour's high or low. There is approximately a 93% probability we'll take out the ETH high or low. There's an 82% probability we'll take out the overnight volume point of control, and I'll point these out to you along the way. About an 81% probability we'll take out yesterday's high or low, and 69% probability we'll get to the previous close. 69% probability we'll take out the ETH high. 67% probability we'll take out the first hour's high. It's called the IB high, initial balance high. And a 67% probability we'll take out the previous point of control. What are all these terms? Come to Trader Lab. You can find out. And remember, this stream is about understanding market mechanics. It's based on 60 PDFs that I share of structured trades, and that's what I'll focus on. I'll also be focusing today not only on the structured trades, but trade management and the process and how the market works. Now, this is only, call it a snapshot in time, and it's a high-level overview. If you're interested in education and joining a group of like-minded traders who come together to leverage their collective experience, it doesn't matter what you're doing now. Bring it, because we all want to get better. And we get better by helping each other get better. Anyway, let's get going. So, let me find out where RTH open. Market opens here, and you have the statistics. Let's get going. Now, this yellow line is called the developing volume point of control. Now, every time I start the stream, I start, as we say, at the beginning, because as the market unfolds, now if you're in Trader Lab, you have a plan. Now, the plan doesn't tell you what will happen. What the plan tells you what you will do when something happens. And you have identified that something, whatever it is, and that's called vetting, because we're not making it up here. All the work's done outside of trading hours. You bring your plan to the trade, and then when the trade matches your trades that you have vetted that have a statistical edge, you already know what you will do. You have defined it. The conditions must exist. It's a conditional narrative. If this, then that. That's how it works. But if this, then that. But if not, then what? It shifts your gear. And then you have kind of a track of logic, or think of a schematic of process and next steps. And it's like a foreign language or a musical instrument. You know how to play the notes. So what I do, I don't use indicators, and many traders in Trader Lab don't. Of course, some do, or mix them together. Whatever they do, they do. It doesn't matter. But if you don't understand market mechanics, what is your indicator going to do for you? That's just a question. I don't use them, so I'm a little biased, you might say. So let's take a look. Markets opening inside of yesterday's range. We had a nice move up. You guys all know about yesterday, and the link is in YouTube. You should watch that link from yesterday, and it's at the top of the stream in YouTube. Watch it if you find this process, because what I'm showing today is a continuation of yesterday, but it gives you a high-level viewpoint. Let's go. So this is the RTH open. Everything resets to zero, and that means over here, this is the developing session volume profile. This is the chart volume profile. Now, what this is going to show you is only what's on the visible chart. This is going to show you everything as it comes in for the session. Over here are levels, and this updates in real time. Some of them are from yesterday, some are developing in today, and I'll be discussing those. And then in this column are custom notes. In other words, I'm going to mark things that are relevant to the developing auction. The yellow line is called developing volume point of control. And let's just call it what it is. Trading is shopping. The yellow line's high volume. When you go to the store, you buy something, you buy it at retail, it's high volume. Buyers and sellers agree on the price. If price gets too high, you're going to run out of buyers. If price gets too low, the sellers are not going to keep selling it on sale. Think about it. If price gets too low, the buyers perceive it as a deal. You're in the store, you throw a few in the shopping cart. It's no different here. And then we tend to come back to retail. Now, the other part of this yellow line, and it's only one piece of this, is it's where the high volume is retail price. But since we trade in, as you think, multiple time frames, this process takes place in something called a fractal. And a fractal is what happens right here. So we're looking at this in this with the highest volume at the moment here. So this will shift around for the total day, developing full day time frame, yellow line. In the more micro structure, it's happening right here. So this auction, and these are consolidations, too high, too low. Why? Buyers are here. Why didn't the market go up? We ran out of buyers, and we have sellers here, passive sellers, limit order book. Then the market goes down. We have initiators. The red bubble is the aggressors. Aggressors made up, and I'm just giving you a basic overview, are of initiators and of sell stops, market orders. Delta's market orders. The other part of this is, if I have aggressors here, why doesn't the market go up? Because they're being absorbed by the passive side. And there's the iceberg. Sell iceberg, passive, limit orders. And we can detect them. The green bubble, buy stops. If we have sell stops like that, then you're going to see the stops coming out and initiators. So let's go. RTH open. We go up. Who knows? Microstructure, that's what it looks like. I'm just going to throw a line on here so you get some sense of what this looks like. I'm going to draw some stuff, and I'm only doing this to help you see structure, because this is what's called price action. And you guys know what consolidations are, but do you understand what they are? I mean, yes and no, right? What a consolidation is an auction. Too high, too low. And inside a consolidation where we're crisscrossing is the volume. And it looks like this, high volume. So you have too high, too low, too high, too low. Retail. If this price is too high, and I think of these as stores, I simplify this because we think trading is complicated. Well, it is random, but not complicated. But it changes, so it's always uncertain. So when you see this, you think it's going to the moon, of course. And what happens? Well, too high, too low, retail, breakaway, rejected. I'm not paying that. This is the store down the street. Saturday night, pint of ice cream, $6.75. You got to have it for the movie, but there isn't a line outside the store for the ice cream, that kind of thing. So this is a shopping experience, the auction. Now, in the higher developing time frame, this is the auction. Okay, so now you know. So we're going down. We have our sellers going to zero, right? I don't know. What happens here? Well, I marked it. It's called the opening swing low. Now, there's a couple other pieces you need to be conscious of. This is called the microcomposite volume point of control. In the intermediate time frame, this is the high volume. This is retail. So in the developing time frame, this is retail. Going up, think Russian dolls, write that down. That's what fractals are like. They're inside each other. So in the higher time frame, intermediate time frame, that's retail. In the developing time frame, the yellow line is the retail price, highest volume. And in the microstructure, going down in time frame, that's the high volume. This is resistance at the moment because we left it. And where's our support? Isn't that fun to know? Who knows? This is also a retail price down here. So the possibilities are too high. This is fair. And where's too low? No clue. Watch. And don't know. Anybody thinks they know? Come to Trader Lab, help us know, because I don't know. So right here, right there is high volume. And again, this is hindsight because we don't have foresight. At least I don't. But what I know is my sellers are here and I anticipate it's going to keep going. But what happens here? Sell stops, and I get micro high structure. High volume. Again, I don't know. So right here, it reverses. Now I see my buyers. So why didn't we go down when you see the aggressors? There's a passive side that this is how the order flow helps you. Now the order flow doesn't tell me necessarily what's going to happen. What it's telling me is what happened here. If I have sellers here and now I get a buyer above the sellers, it is indicating me the potential, notice the word potential, that these guys were absorbed by the passive side. There's an aggressor and a passive. Passive means they're just sitting here. Yeah, I'll buy it if you give me my price. Otherwise, forget it. It's like you buying it on sale. A Black Friday sale for Bookmap. You know, I want to buy it on sale. Well, right here, it was on sale. But we don't know it until now the price comes back to retail. Now, where was our resistance? It was over here. Now, there's another piece, and that's why I posted yesterday's stream. You need to watch yesterday's stream to understand what you're seeing today, and it's in YouTube. This is called responsive selling. These guys who are long, when we open in range, and we're higher in range, but we're under yesterday's high, you might get profit taking. That's called responsive selling. And the thing is, we don't know where it might go. You know, that's part of the joy of randomness. So here, too low, break high. I come across the range. That is suggesting two-sided trade. This is what was too high. So this is my resistance. I'm not paying that. One moment. Okay. So we come across the range. Watch. This is called VPOC migration. Now, this is an advanced concept, and I've done webinars on this in the Trader Lab. I'm going to mark this. And I did a specific one. In fact, you could see specific opening structured trades. Now, I always tell developing traders, don't trade here because this is advanced. This is not where you start. This is where you train your mind for unconscious competence because of the speed. Now, we're in here 5 seconds, okay? Most developing traders cannot respond because they don't know how to speak the language. So let's watch. Too low, microstructure. Too low, variable high volume node. Too low, new retail price. This is called VPOC migration. And I did a specific webinar on this. So now what do we have here? The VWAP, the mid, too low, support, resistance, resistance. Notice where we came, resistance, pullback, two-sided trade, and I'm going to show you the first structured trade. If this is too low, and we know this is too low, and now the retail or high volume has changed, it's not here, it's no longer there, it is now up here. Remember, this is shopping. If shopping, the buyers and sellers are now transacting up here, which means there's more volume here, so this is an accepted price. If the market rotates down, and we know so far this was too low because they were absorbed, does that suggest maybe an opportunity to get long? And why might we get long, you're asking? We have a statistic, the ETH high. I know you write these things down. And what is that probability? 69%. Huh. What do you think? Let's watch. Remember, Trader Lab long. VPOC migration. VPOC migration. Now, there's more. Now, let me show you something. I hope you find this interesting. Please give a like if you're, I always take time, because when you can understand concept, you can extrapolate this to everywhere, because it's all the same in all fractals and time frames. This is your support, right? We come across the range. This is our retail price, and that's our retail price. Let's watch. If you get long here or here, this is a trigger in the Trader Lab. There's your support. Stop is under there. Where's our resistance, you ask? There. So if you get long here, you would like to get scaled here. You have the opening swing low here, and where's our opening swing high? It's there. What's over the opening swing high? Buy stops. That's your fuel to go there. What's under the opening swing low? Sell stops. Don't forget that. And that's why I'm referring to yesterday's stream. Same situation, but always unique. So we break out of the opening swing. We get into the stops, 69% probability. Watch. My developing POC, Pablo, I'm getting a question how I configure it. Right click on session volume profile. There's a little checkbox for POC. Make sure you that it resets at RTH open. Developing volume point and control shifts. So it's VPOC migration. I'm going to label this. All this is important. I'm tracking the shopping experience. We are shoppers. You know, you heard the saying, buy low, sell high. Where'd that come from? Be a good shopper. Variable high volume node. Remember, 69% probability. Now I'm going to be showing you some more advanced concepts here, so watch closely. So, where did this come from? Too high, resistance. VPOC migration, break high. VPOC migration, break high. Break low to where? Right there. What is that in the Trader Lab? It's a long. What else is it in the Trader Lab? A structured trade, VWAP, mid to VPOC with alignment. All these are structured trades. Break high. Where am I going? There. 69% probability. So here's the question. If you got long here or here, or here to there, would you be okay with that? It's what the market offers. Are you guys with me so far? That is a structured trade. Are you guys tracking? And Pablo, did I answer your question? How we doing in YouTube? Everybody conscious? Sometimes I think I hear noises and I think that's chins hitting the desk or the keyboard. And typically it comes from YouTube. Trader Lab is already passed out. So let's look. First target. Now remember, we have other probabilities here. High probability of taking out the first hour's high, which is called the IB high. And we also have targets below. What's this? This is a target. And we have now stops under this low. We also have this as a target, 16. We also have settlement and this. And the naked volume point of control, let me give you the statistics, 67% probability we get there. So we can potentially, of course, do anything. I know you like that, right? Why would I say that to you? Because it's the truth and because we're in an uncertain environment. Remember, the casinos, the cards coming out of the deck and how the gamblers play the cards are completely random. They have no control. You have no control over what the buyers and sellers do, what kind of inputs come in, whether it's a news item or just somebody trips over the cord at the CME, which, by the way, has happened. Happened to me many years ago, where they just lost, the CME went down. Well, that's pretty useful when you got a bunch of trades on. Anyway, not important. So now let's look at the microstructure. So this is right here is a long to there, structured trade. If it's vetted, remember, your job in the Trader Lab is not to be making it up. This is not a video game. You can treat it as a video game, but I think you're better off and it's less costly to actually get yourself a video game and do it after trading hours if you need the stimulus. For me, I just sort of lapse into a coma and watch the stream. See if I missed anything and how I can improve. I put my energy there. If I'm going to gamble, I will go to the casino, but I don't need to do that. So, retail price. Coming out the top, got our target. And now here's the thing about trading. We don't know what will happen. We do know what might happen, and we don't know where. So remember, all we're doing is operating in uncertainty. So let's watch. We test the retail price. Remember, too low, test back to there, too low, come back here, too low, come here, too low, going to the moon, get our target, overnight high. This is retail, maybe too low, and for all we know, we're going higher because that's all we do now. What do? Watch. I narrated this in Trader Lab. By the way, I don't know anything's going to change over here, but when we break here, this changes things. Because now what we've done is we have now come across the range, and we're taking out this level. What that sets up then is the potential to come completely across the range and take out the opening swing low. So right here is an opportunity for trade management, but we don't know. Remember, you don't know. So right here, as far as I know, it's chop, chop. Notice the test, high volume, come up here. I see selling iceberg, 65 buy stops going off. Thanks for playing. Micro high volume here and a trigger, a break low. Now here, no clue. Holds this, fabulous. Having a great time. Let's watch. This is a consolidation. I had limit orders up here. So I'm seeing the limit orders and the icebergs and the stops. So okay, fine. They can do that. Markets rotate. No problem. Break low. As long as I'm holding this, I'm still a happy camper. This here is the high volume in this structure. So if I put a little box around this thing, because it's a consolidation, and remember, I don't know. I'm clueless. When I say I'm clueless, I'm not saying I'm ignorant. I'm saying I'm in a random environment and I can't project anything. Right here, support, come back to the volume. I need to come out here where the sellers were. What happens to this buyer? The sellers that were here, the sellers in this leg, remember, why does it go down here? There's a passive seller. There's a seller here, there's a seller here. break low. Sellers are below these buyers. Come back, sellers are here. I get my buyer here. You see the iceberg, sellers are here. Now, in this scenario, we do know buyers were here. Why? You see delta and they were absorbed. So I got buyers here. I got sellers here. And it's a basically who's on first, right? Watch. And until it happens, you don't know. I break here. So that means these buyers were absorbed, sellers are in control, and there's the delta. Aggressive taking over, sell stops coming out, and we'll see you later. Thanks for playing. Break. Now, time for a short. Watch. Now, what happened here? Now we're in 10 minutes. This is a distribution. This urgency, this breakaway is suggesting at the moment all of this up here is too high. And now we have our sell stops under the current low. Okay? I'm going to put in a little thing here called the low volume node. And what a low volume node is, it separates distributions. What's a distribution? It's a consolidation. It's buyers and sellers and high volume. So when you look at this, you had your sellers up here, and when we ripped out of here, we rejected this volume, which was created right here. So that's why you have this, okay? Too high, too low, too high, too low, retail. And if the collective buyers and sellers in here go, I'm not paying that, we leave. It's like you getting in the car saying, I'm not shopping here, and you go someplace else. And now market mechanics, sell stops under here. So let's look. This sets up a short right here. Why would I get short here? Remember this? Support becomes, what's the answer? Support becomes, what's the answer? Resistance. How we doing in YouTube? Support becomes resistance. Give a thumb up, please. How about a like? So now in Trader Lab, this is a short if it's in your trade plan. Remember, and where does it, this is your resistance or the outside edge of this consolidation, which I fell back into. That's great. Thanks, Sandor and Dre. Appreciate it. Thanks for the answer. Resistance. Trader Lab structured trade. Let me show you the trigger and the entry. Watch. VPOC migration. Let me show this to you. I got to label this. Why is the VPOC migrating? Let me show you this. Because the retail price above is too high. Remember the VPOC migration coming up were longs. If I break out, and this is now resistance, and I break down, I have choices. I can be selling it on a retracement here. Stop has to be up here. I can be selling it here, here. Support is here. Notice what we have, and resistance now is here. I'm going to put a little line in here. By the way, everybody takes stops, so we can't avoid that. Casinos pay the gamblers. Let's watch. Market comes up. So if you took a short here, I just got to show you what's going on. You take a stop, okay? Comes back here. This is resistance. We blow through it. We take out the shorts in this leg. And now let's look again. High volume is here. So we have two-sided trade. So either we're going to continue up or, once again, we're going to come down. So we take the stops out here. We're in two-sided trade. Let's look. So right here, going to the moon. For me, I did not have a long here. I have a short. I take a stop. How do I feel about that? I'm not happy. But what about the business I'm in? There's overhead and cost of production. Here's how I navigate those experiences. Did I follow my plan? Did I do what I'm supposed to do? The answer is yes. Good. Part of the plan. Did the casinos play the game the right way and they deal the next hand and then they pay the gamblers? Does the dealer get fired? No. Do they pay the gamblers? Yes. Do I wait for my next trade and deal the next hand? with my structured vetted trade that has a statistical edge, same as blackjack has a statistical edge. That's my job. Yes. This is a consolidation right here. Chop, chop, break high, test, microstructure, break low. Now, not actionable, but watch. What happens? Break low. What this is telling me right here is this is now too high. I also know I'm in two-sided trade, which is outside in trading. It's called mean reversion. Look at where our levels are here. What happens here? Support becomes resistance. We blew through it. It's still support. I get my low volume node. Same thing I was showing you over here. I got to move it. And it's out here, this low volume. So here's my consolidation. Here's my high volume structure. It's right there. I'm going to put a little line there in case we come back. I have no idea. Right? I think I got it there. So now, break, and then we have the report. Where does it come? 24. Where's our entry? It's in the area of 24. Can you get in here? Kind of hard, isn't it? Let's look at the structure. Now, here's the thing that I know. I know I don't know. So I don't know. But what I know is I have a level here and I got a level there. Those are my structures. This is already existing before we come up off this report. I hit it. Now, how do I get into a trade here? Right here, I hit my level. Now, this is very fast. You might not be able to react with this. Then I get my chop, chop, chop. So I have my buyers here, resistance, and then I have resistance here, exhaustion, and now I don't know until it happens. I have my microstructure here, and I break. Now I have a short, and I have to see if I can get into it somehow. Let's watch. VWAP, resistance is here, resistance is there. This is a potential short. Your stop should be out here, or if you have microstructure, you can put it closer. That's up to your plan. Where do we break? So this is a potential short. I think this is very difficult unless you have a lot of experience, but this would be your opportunity. Your stop will go here, or you're selling this and your stop should be up here or up here. Either one. These are structured trades. And again, this is a bit advanced. Now, let's just watch. Where are we going? This is a target. And our next target with a 67%-ish probability, I believe it was 67, is here. So this would be your target. Now, watch. So all this is fine. Let's look at the structure. This is resistance. Watch the behavior. What happens when we come down below the support? Becomes resistance. Resistance. Microstructure. I'll go down in fractal for you. Think Russian dolls, because this fits inside. They fit inside each other. So here, this is resistance. Resistance. Microstructure. I'm going to show you some structure. And a lot of this, this is available in Trader Lab. I can't really get too detailed for you here, but this is what you got here. This is absorption. You see the icebergs. You see the buying icebergs here. Buying icebergs, all these hundreds of icebergs down here. You're seeing that. That's saying be alert. You see this going down. It looks like it's going to keep going towards your target, right? What do I see here? Micro consolidation, break high. I come back to this volume, resistance. This is where your trade plan comes in. Here I break, I have my sellers. I come up here, resistance, break low, going to zero, Lewis. Right here. What do I have here? Break high, break high. Uh-oh. This was my last location for sellers and definitely up here, because I got buy stops now sitting here and I get taken out. So subject to your plan. Remember, all this is done before you ever get in the market. you know what you will do, because we don't know what this is going to do. This is random. Where did the buyers show up? Why not here? Why this rotation? Why didn't this rotation be this rotation? Why did this happen here and not there, or not there? There is no answer because it's random. Write that down. So we come back here. Now at this point, we have our buyers here. Let's look at the microstructure. Now we don't know anything until hindsight. So let's get over it. Watch. So this is where I had my absorption and my volume. The sellers were there and the volume is there, and I broke low. So that says this is resistance. When I come back above this, the antenna needs to go up. See the change in behavior? Now, subject to your plan, you also know the sellers were here. The sellers were there. The sellers were here. Breaking low. No. Buyers are here. Once you get above these sellers, these guys, then you have to be on alert, because this buyer is above these sellers. We also had a stop sweep here too. That's another thing you can understand. If you understand stop sweeps, that can be an exhaustive indication of potential change in behavior coming. You can learn about that in the Bookmap knowledge base. There's a lot of examples. These are things you would know if you have a high tier order flow tool. Now, the fact there's a sweep is not a reason to do something, but what it is a reason to get alert and be looking then for change. All these tools can potentially give you an edge. That's why Bookmap is key in my trading. And don't forget, we're going to have this, Bookmap's going to have a Black Friday sale. So, as they say, keep your eyes peeled for that. Buyers are above the sellers. Buyers are in control. Okay, so these guys are under the bus. Buyers are taking control and taking over. Now we have acceleration on the buy side, and you can see now the buyers are in control, and they're going to squeeze out the potential shorts on the leg coming down. Is everybody tracking? RP, come over to the Bookmap Discord Trader Lab community. There's a lot more to it that I can cover in here, but the Trader Lab, there is a library of webinars on this type of trade and these specific structured trades, as well as 60 PDFs that you can download, and there's no cost for that. In fact, all of you guys that are visiting in YouTube today, if you haven't come over to Trader Lab, I think since there's no cost, and this is really advanced trading. This is not your plug and play indicators and the holy grail. This is the real business of trading. So it's probably different than most of you have experienced, I would suspect. Also, what I do is derivative in the sense of advanced volume profile or profile trading. I started with the market profile in 1985, and I can tell you that what I do is a little outside of what's in the mainstream. And then, of course, you got to vet it for yourself anyway. It doesn't matter. So change in behavior. And often what the market does is you're going to get traders on the other side. They're going to fade this rotation. Now, who's going to come out on top, as they say? Take a number. We'll let you know. Where's support? Watch the behavior. What is this? You guys, we were talking support and resistance. Isn't this the same thing? And didn't I mention if you have a stop sweep, it could mean a reversal? And didn't I mention, this is not about being right. It's about observing and understanding behavior. There is no right or wrong. Forget it. Take it out of your vocabulary when it comes to trading. What there is strategy and an understanding of market mechanics, how it works, why it does what it does, and then you have vetted trades. This is a structured trade in the Trader Lab if you've done the work, because this is a language. What is an indicator? It's only a translator. It's not anything more than that. But because of multiple time frames in canned indicators, they're not responsive to the moment. They are generic. And the market is unique in every moment and completely uncertain. And since we're seeking certainty, we're always going to try to curve fit. And we are going to have winning trades if you had no indicators. I mean, if you just blindly pushed buy or sell, you're going to have winners. So that's our problem, really, because everything works sometimes. But the language of the market is what's happening right here. I know with a sweep that I have the potential for reversal. I know, and this is what I know, not what will happen, what might happen. I know this was too low. And I know that if I come to the mid in the VWAP, and these guys can be right, I might sell this right here. But I know I had a sweep here, and I know I got to clear this. Because it's support, if I short here, I got to scale maybe ahead of here or at least ahead of here to get risk neutral. And then I'm going for my 67-ish% probability target. What happens? I get risk neutral. And let's say I don't get long here. I'm managing my short. Both are correct. What happens here? Absorption. This is the absorption detector. Is that an indicator, red light, green light? No, it's showing me, like the sweeps did, that there's behavior taking place under the hood that average retail traders who are just using indicators have no idea. But because I have an order flow tool, I have insight. That gives me an edge. That's all I need. And I'm still going to pay the gamblers because we all pay. So now when I don't go through here, and I know my probabilities are maybe 67% to get down, but I'm in two-sided trade, and remember the statistics at the top of the stream, my higher probabilities come out the high of the day. So I have to trade what I see. So target, scale, and then I end up scratching this trade. So let's watch. Now, when I say I would scratch the trade, you might actually be buying it here. You see? It doesn't matter. So let's watch. Now, when you're in two-sided trade, you need to understand what it is. It's not your typical buy and hold scenario. When you're in rotation, it becomes a outside-in trade or mean reversion trade. Now, the first time we break under, when you're looking at this thing, when you come under here, it's looking like we're going south of the border, right? Lower highs, lower highs. And we're going, and this is where the sweep is, and then the change in behavior. When you come back here, because of the high probability statistic below, you could still be on the shorts and you'd be scaling here. When we come across, it's a change in behavior. Now you're back into two sides, and the shorts on this side are up for being in the squeeze area. And you won't know this until in here, and it's specifically crossing over. Because now it's reversion trading. It's a change in behavior. So we don't know about changes until after. I mean, that's just the way it is. So here's your support. If you're looking for it to go to zero, the absorption was there, the sweep was there. Both of those are structured or order flow phenomena that you would learn about when you use an order flow tool. And then that would give you, it doesn't tell you to do something. What it tells you is there's behavior happening and that you need to understand what it says. This is language. So order flow is the participant language, kind of where the rubber meets the road. And then we're using processes to translate a foreign language. That's how I look at this. This is language. And if you can speak market, indicators are translators. So I don't use them because who wants to wait? I can't afford to wait. I want to know here. Now, it doesn't tell me to get long, but I do know my long short trade, I got to be very attentive to it, because if I come back across here, and I'm risk neutral, remember in Trader Lab, it's risk management. So if we're in Trader Lab, you would be risk neutral and you could be hanging out here working on your crochet until you come down and you see the absorption. Then your job is to manage the trade. And that's something you would vet, and you would know over a large sample size, just like the casinos do, what trade management or time frame or fractal you operate in what gives you the highest yield? If I asked you that question and you were sitting on a trade desk with me and you didn't have the answer, you wouldn't be trading. You'd be on sim or you'd be doing research to extract metrics. Then when you can teach me that specific structured trade, why it's qualified, when to enter, how to manage it, how to scale out to get risk neutral, how to target statistically, and how to manage the trade, then you'd be qualified to sit on the trade desk. And when that trade shows up, you put the trade on, win or lose. Because now you've become a professional trader and you're in a learning process of vetting and developing your trade plan and adding more and more and more structured trades, one at a time, using a template that I've shared with you that is overlaid on a process that extracts dollars from gamblers, and that's called gaming and setups or games. We're not playing a game. We're in a serious business, but we are not playing a video game. Trader Lab is not for video gamers. It is for serious traders who want to build a profession. This is an advanced educational process in trading. Let's watch. We come back up. Let's watch the process. VWAP, mid, and we're in two-sided trade. Now, we know the trend is up. We don't know whether we're coming or going. We have to read the behavior. So what happens here? Resistance, resistance, and now we're in two-sided trade. What that tells me is I have to be very careful because we had a down leg and there's buy stops. Let's watch. Variable high volume node, outside in trading, right? Outside in, outside in. Now, this is not easy trading because in the two-sided trade, since we're not going to go down at the moment, this is a dangerous place to trade because you don't want to trade in the middle. In two-sided trade, it's called mean reversion. Reversion trading is outside in, outside in. So subject to your plan, you have choices here. We're in an uptrend. We know that. We know this price was too high. We know this is the initial balance high or first hour's high, and that's locked in at 9:30 Central Time. This is called the IB high. What do we know about the IB high? You do know that the IB high will either take out the first hour's high or low, and you got to vet these again for yourself, is 97% probability. Taking out the first hour's high is a 67% probability. Taking out the first hour's low, about a 59% probability. So we have a high probability of taking this out, right? So if we're coming across the range, then what we might want to be thinking about is trying to get long somewhere for the statistic. Because we trade in Trader Lab, we make use of statistics. So let's see if we can get along. We come up to the IB high. We know there's stops here. Right here, we have not taken it out. So we have to look for a long. Pull back here. And now this is hard trade. Now, whether or not you want to take this, here's the thing about trading. If you don't have a trade, you just don't take it. There's nothing else to do. You just go, I don't have a trade. All right. Where's my next trade? Well, let's look. Yesterday's high probability we're going to take out either yesterday's high or low, right? Don't know. This was material yesterday. Watch yesterday's stream. The link is in YouTube. The reason you should be watching yesterday's stream, obviously for a lot of good reasons, but I gave a high-level overview of the higher time frame context, which is where all these pieces fit together. Remember, Russian doll. So the higher time frame is the big doll. When I'm getting down into this, the process or the behavior of the participants is somewhat generic, but this is considered as the little doll in the Russian doll. Okay? So once you understand how the market works in all time frames, as you think of them are fractals, you can potentially better navigate it. So we take out the first hour's high, over 90% probability. Here we are. Now what? Well, trend is up. Let's see if I can find a location here for you. This is not a trade. Now, there are ways to trade this, but in this stream, I'm not going to go there because it's more advanced. I'm going to stay with the, now this right here, and we're pretty much in real time. This sets up a possibility, two possibilities. One is called the IBF. The IBF is a counter trend trade. Now, we're inside of an uptrend. We have a high statistical probability of taking out either yesterday's high or low, about 80%-ish, past performance not indicative of future results. So if you're taking a short, it would be a mean reversion trade. Remember, we're in two sides, but the trend is up. We'd be looking for a short. It's called the IBF, and its objective is to come back to the volume point of control, which is this, right here. So that's called mean reversion, outside in trading. Let's see what else we got here. Remember the stop sweep. What happens in a sweep? It might go in the other direction. So, but we have the statistic. So we're looking for a potential short. So if you took a short here, right here, you're looking to come back to there. Your stop has to be outside of here by a couple of ticks. If you got stopped out, thanks for playing. They'll give you the coupon to the buffet, and then you'd be looking still for either continuation long or another short watch, which may or may not be appropriate for you. Let's see. Microstructure, I'm going to just put a little line up here. You see this little high volume? This is the midget fractal. Break low, trigger, test. Buyers are here. Buyers are here. What happened to these buyers? Absorbed. Absorption. Up here. Absorption. What's happening here? 1,000 icebergs are over here. Break low. Come back and test the sellers. Here's the aggressors. Why isn't the market going up? Why didn't the market go up here? Why did I get a sweep here? What happens when I get a sweep? Possibility of a reversal. I come back and test. This is Trader Lab Advanced Trading. It's not for you. It's for Trader Lab. And you can learn this. But this is now I'm into more advanced processes. Why? What is this going on right here? This is a micro consolidation. Fractals. Too high, too high, too high. Break low, trigger, test. There's the buyer. Break, short, to where, to there. Let's see what happens. Don't know. No clue. It's called mean reversion. Specific trade plan. Okay. So here's what would happen in this trade. You'd be risk neutral. You'd come back to VWAP. You're trying to come to the mean. Excuse me. I need a drink of water. Sorry about that. And don't forget, there's a link there in YouTube that my helpers place in there for you guys, so you can see an advanced overview of what this is, plus the opening trades from yesterday and how it all repeats itself in a random fashion. So this is VWAP. Now, remember, trend is up, and we have a statistic that suggests yesterday's high or low. We missed, I'm trying to summarize here, we missed taking this out. So this was almost a 70% probability. We didn't go there. So that suggests either rotation, come down, but the trend is up, or counter trend back to VWAP and VPOC. Remember, this is the target for the short that I narrated. Here's that absorption again. And if I get the absorption, what does it tend to do? Go in the opposite direction. So that gives us a VWAP trade, or you're just on the short side, you had scaled and you're holding for this. Either trade is appropriate, except, here's the exception. The statistics you wrote down suggested either back here and maybe just back around, maybe come out here, or since we took out the IB, the trend is up and the potential, because of the high probability statistic, which I think is almost 80% to take out yesterday's high, and it doesn't have to do it now, ever, and never. The market doesn't have to do anything. There's no 100% statistic. So the short would be risk neutral here. You'd be taken out of it. And if you manage your trade with a vetted trade plan, the trade would fail right above there. Just saying, and it's up to you. Or when you see this, you use this structure for a long to take out the high, and that would be your trade. I'm showing you different scenarios because it's time frame specific. I don't use the clock. There's no time. It's really fractal based or participant based, but I'm using your terminology for most retail traders, which is time frame, because we try to fit the market into a box of the clock, and the participants are not on the clock. They are on the what's too high, what's too low, and whatever time it takes to figure that out, that's the time frame. Does that make sense? Do you have questions? And if you're in YouTube, please give a like. It's useful. And I want to remind you guys that there's a special Bookmap Black Friday event taking place. Check bookmap.com for what that's going to be. They can be pretty substantial discounts, which I think is pretty cool if you've ever wanted to try a high-tier order flow tool. Also, there's an opportunity for you guys to get free, no-cost one-on-one coaching with me if you're interested. You do have to submit a, let me just find this for you. You can win the blue jacket. This is in the Bookmap Academy. It's a no-cost coaching and mentoring solution where you can access that. It's open to everybody in the Bookmap Trader Lab and Discord server. You could win 3 months of Global Plus, a month of Discord Nitro, and one-on-one coaching session with me. Now, so you guys understand, I do individual coaching with traders from time to time on an extremely limited basis because I'm a full-time trader. But a lot of traders, ask about, well, how does this work? How can they accelerate their learning curve? So I don't get to do it very often, but I am going to do it for the winner of this month's blue jacket. And that's in the Bookmap Academy. You can all register for Bookmap Academy. It's not too late, but you do have to submit your examples. What you do, you would take a trade and you would analyze it and you'd annotate it, just like my 60 PDFs that I share with everyone here, which you guys know there's no cost for that. And you can download that in the Bookmap Discord Trader Lab. And there's a link in the bottom of YouTube of these structured trades. Now, it's done as a broad stroke. The more advanced trading processes are exclusive to the Bookmap Discord Trader Lab community. And remember, the community is a serious community. It's all about the business of trading, building career paths. And while I cannot say what your outcome will be because it takes a commitment, no different if you were going to be a professional at any high level endeavor, it could be anything. A physician, an attorney, an athlete, understating process and discipline and being organized and having a plan. This is not a video game. And I know probably a lot of you have played video games, but this is really, the Trader Labs is based on business for developing traders, career path, and the leverage of the community to actually help each other do better. So that is the Trader Lab. Let me see if I can find something for you here. This is what these 60 PDFs look like, what you're seeing me do here. Now, this is a broad stroke. I'm not a vendor. There's no cost for this. And you can kind of get some ideas. I started doing this kind of thing, I don't know, 2000 something. But worked with the order, I should say, before I had an order flow tool. I really wasn't seeing the full picture. So anyway, I want to share that with you. You can access that in the library of webinars. If you're interested in one-on-one coaching session with me, submit before the end of the month your mock-up of a trade for potential coaching and mentoring, which is available in the Bookmap Academy. Also, you can win the blue jacket, and that's pretty cool. Any questions, guys? I'm not done yet. Still got time. We're going to go back to the market, but I want to make sure you guys know that you do not want to miss out on this opportunity. When it comes to coaching, I really don't have the time to do it. When traders can ask me for help, I'm always glad to help out when I can. But individual coaching is something I rarely get to do. And if I do it, it's on a very limited basis. So here's a chance. Now we have another trade. I'm going to take some of these lines out of here just to unclutter. And I'm going to take you now into the next structured trade. So where's our next structured trade, you ask? Let's go back to our statistics. 80%-ish probability, past performance not indicative of future results. We take out either yesterday's high or low. Now here's the hint. We could not get back to yesterday's retail price. Naked volume point of control is this yellow line, which is called the volume point of control. In a developing time frame, this shifts around. That's called VPOC migration, and that's what these variable high volume nodes are. And at the end of the day, it locks in the highest volume for the day. Think of this like where most buyers and sellers were willing to do business, and this was retail. Well, if the market goes down and it can't get back to the retail price, the market, and we're talking language, is suggesting potentially this price is now too low. If this price is too low, and this is the new retail price, developing volume point of control, and we have the low of the day here, and we found a microstructure, wherever it is, back here someplace. That was too low. I took the lines off. Then it sets up our statistics. Maybe, and this past performance not indicative of future results, to test yesterday's high, take it out, or do nothing, or not, or have an inside day. So statistically, we have a long called the IB continuation trade. And it's based on a couple of things. One is we couldn't get back to VPOC, maybe too low. We got our short from here, which is a structured trade, counter trend, back to VWAP. There's also the possibility of a long out of here, or you're out and you didn't take the long. Where's the next long? Remember I said we'd look for another one? It's right here. This is a structured trade in TraderLab. Let me show it to you. It's called the IB continuation trade, and it is in those 60 PDFs of trades that I just shared with you, and you can get them. Let me show you the structure for it. So this thing here is our resistance. I'm actually going to come back to this. I'm just going to show you how you can do this. So at the time, this sets up our short for mean reversion, right? That was the last trade I was talking to you guys about. And the consolidation structure that built this, that we broke away from, was here. So this is what's setting up these shorts, this structure. So this is our resistance. I'm not paying that. You got to be kidding. Leave. Come back and test. You are crazy. Microstructure. Leave. Coming down here. You see? That's how this works. So now we break up here. So now I come back here. This is too low. I come up. Here's my microstructure. IB. Now I'm going to do the same process over here because I have my chop, chop, chop. This is resistance. Where did it come from? Here, here, and there. Resistance. I'm using the same process. Now watch. And order flow, because I'm seeing what the order flow is really. Here's microstructure. Sellers are there. Buyers are here. Now, I don't have time in the stream to take you down into this as much as I'd like to. But when I do work with individual traders, or even in TraderLab, where I spend most of my time, of course, other than when I'm focused on putting a trade on. Once I get a trade on, I can multitask. When I'm putting a trade on, I'd zero in. Sellers are here. Buyers are here. Buyers are here. There's the delta. This is support. Test the top of the consolidation. Microstructure. Buyers are here. I break high. Buyers are here. This is my support. My sellers were here. They got run over. Buyers are here. Sellers are here. See the sequence? I can go down in any fractal or time frame and read this. You can too once you understand it. Remember, this is the language of the market. Buyers are here. Sellers got run over here. Thanks for playing. Send the ambulance. Sellers are here. Buyers are here. This seller was absorbed. Sellers are here. The buyers that absorbed this seller are over here. This is order flow. Buyers are here. Buyers are here. This seller's under the bus. Send the ambulance. Buyers are here. Sellers are there. Buyers are here. Buyers are here. Buyers are there. Okay, I'm not going to spend more time on this, but I'm taking you down to how fine you can. That's like almost electron microscope. Now, why would I do that? Because now I'm reading the market in the present. I'm not waiting for an indicator. And what it does for me, since I have a vetted structured trade in the Trader Lab, which is called the IB continuation trade, I know this is too low. I break high. I have support here. If I want, I can put a long on here. But if I'm waiting for the structured trade, now I have my chop. My high volume is here. The sellers were here. When buyers take over these sellers here, and this seller down here is under the bus, and the buyers were here and putting together pieces, and now I have my location. Think real estate, the IB continuation trade. This is a long, stop is under here. Oh, not a trade recommendation. And remember, it can do anything. So if you get long in here, your stop could be under, I put my stop under here because there's going to be retail stops here. So my stop would be here. My long could be here, 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 and then you want to get risk neutral. What's it today's high, stops. So what I'm looking for is to catch a rotation, get risk neutral, and then my objective is there and, the Hail Mary pass, throw it into the end zone and put a helmet on. Questions, guys? Hope you're getting something out of this. Remember, this is not a trade recommendation. I take stops all the time. And by the way, taking stops is not a personal failure. It's overhead and cost of production, because the job of a trader is to take intelligent risk, pay the gamblers just like the casinos do, but only play games that have a statistical edge. And assuming you've done the work, which is all done outside of real trading hours, it's done in the research mode and it's done in collaboration with Trader Lab, so you can get support from other traders who've walked in your shoes. That's how this business works. Hope you're getting something out of it. If you're in YouTube, please if you have questions, now's a good time to ask. Please hit the thumb up. Remember, these streams are available exclusively to Bookmap Trader Lab participants to reverse engineer the structured trade, screenshot, circle arrow, review how this, my narration compares to yours. And by the way, there's no monopoly on, quote, the right way to trade. See, the right way to trade is what aligns with your psychology. There is no plug and play. That's just not real. I mean, how can you be in a business where you have basically unlimited income potential and you can buy a software toolbox and then match up time frames with indicators and somehow think that's trading? Now, I understand that's what we believe. And at the top of the stream, I talk about beliefs. That's not the business, but that's our beliefs. And what you might find is what you're doing, the process you're doing, with all that effort and intention and frustration and enthusiasm, how many dead ends have you walked down? I've been down so many dead ends in trading I can't remember, and I choose not to. My learning curve was horrendous because of the intermittent success I would have using processes that did not have an edge. I believed early on that more indicators created certainty. And when you look for, quote, confirmation, that is a hint that you don't understand the business you're in. There is no confirmation in a random environment. It's always random. It's always uncertain. But we focus on certainty because of our primal wiring, which is to avoid uncertainty, to seek certainty. Yet that's not the business we're in. So we're trying to fit this business into something that is not aligned. And we believe we can get it to align when it's not the business. It's like deciding you're going to manufacture cookies when you're in a different business. You're in the gaming business. How can you apply a recipe of consistency, expecting a consistent outcome when the ingredients are constantly changing? The only way you get to create something is you're anchored with anchored inputs. Then you can measure it. This is what the Trader Lab is built on, to help traders stop repeating processes with intermittent success. That's what kept me for years fixing things and then curve fitting them, adjusting, tweaking, and then getting enthusiastic and then having a sequence of winners or losers, the same thing. But over time, it would always break down. So I was always trying to fix something, and I didn't understand why. I just thought, well, maybe that's what it is. You got to just tweak it. It's like your old carburetor. Just get the screwdriver out. Well, this is not what this business is. This is a game. And so nobody ever talked to me about gaming. Didn't exist when I started. I mean, gaming did, but when I started trading, everybody was a floor trader. My buddies were all floor traders, and we were in different businesses, and there was no information. You guys have a problem with information because you're getting misinformation. The only indicator you need, and all these influencers out there who are, well, I don't want to disparage anybody because there's people out there with knowledge. But the problem you guys have is you don't have enough assets to work unless you have you do have an ATM in a basement and unlimited time. All those things are finite. So you waste time, you go down dead ends, and you keep, you subscribe to chat rooms or whatever you do, or take some course. And are you still waking up with something called Trader Groundhog Day? If you are, and I did a webinar on that, then you might want to watch that one, as well as come to the Bookmap Discord Trader Lab community so you can see what other traders are doing. Our senior trader has over 50 years in the business. I've got 45, both professionally and out here with you. And I think, and with the community of the Trader Lab and the Bookmap server and the additional education that Bookmap gives it, all at no cost. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, stops, icebergs, what's going on, sweeps, all kinds of stuff going on that if you're a typical retail trader, you might be at a disadvantage because you don't have the tools and you don't understand how the market works. And this stream and the library of webinars is all available to you at no cost if you're interested. Yeah, Nick, prices in the newspaper. Well, I think we all start out trading the news from the newspaper. I started in 1980. Newspaper was really high tech at that point. So let's watch this potential long, not a recommendation. Remember what the objective of this trade is. Now remember, the market can rotate. So how do you operate in this environment? The long is the IB continuation trade. It's in those 60 PDFs I showed you. You can download those from Trader Lab, and you'll see the IB continuation trade. You'll also see the short, the IBF, the IB failure, mean reversion trade. They're both in there. You can look at them. And the thing about trading that gets most traders is they really think it's mechanical. And there's another piece of this called context. Watch yesterday's webinar. The link's in YouTube. It's really what you need to watch before you watch this one, because this one is built on top of that one, the higher time frame. And you'll see how yesterday, you'll recognize yesterday, and then you'll see how this fits inside of yesterday. I think it's really useful. And if you want to educate yourself, this is not just another stream or process. I believe I can teach anybody to trade, but they have to do the work. You have to come to Trader Lab. You got to invest in yourself. This is a high-tier educational process to build a business. So it's not plug and play. It's not, here's one trade and now you got a printing press. Let's forget about that. It's just not the real world. You want to play a high-tier, you want to be in a high-tier business, you've got to invest in yourself. I believe I can teach almost anyone to trade. It doesn't mean you'll be profitable. It doesn't mean you'll be successful. You got to do the work, and you got to do something that is not natural, is learn to manage your emotional state in a completely uncertain environment. It's totally foreign to us, and our wiring, our primal wiring, our reptilian brain is going to be pushing back constantly against what you need to do. It's probably the number one obstacle, assuming you have what it takes to discipline yourself and then build a business. And everybody's in a hurry. Meet FOMO. If you're in a hurry and you're jumping around, it doesn't matter whether you come to Trader Lab or anything else, then meet FOMO. That's your emotional state. I want it now. I don't want to lose. I want confirmation. Everybody wants that. Guess what? You're in the wrong business. Sorry to say that, but if you want the straight oil from the can, you can get that into Trader Lab. And when you come to Trader Lab, if you choose, and there is no cost, ask in Trader Lab, what do they suggest? How do you start? What do they wish they did different? Do you know what human nature is? It's all about FOMO. And you don't even really know what FOMO is. I always suggest take one structured trade, one setup that I share, reverse engineer it, find out how to build out a statistical edge. You got to do the research and know over time that you have an edge, just like the casinos do. That becomes a process template that you can build on. And you need to have just one. Then you add another one. Then you add another one. Now you have a business and you're adding product, if you will. That's the real world, guys. Are you interested in the real world of trading? And remember what our target is, almost an 80% probability, past performance, not indicative of future results, is this and this. Who knows? If you're in Trader Lab, you'd know, you'd be long if that's your plan, and that's where you're headed. Please give a thumb up on YouTube, and don't forget. Yes, Alexander, I do use Rhythmic. Rhythmic is special. It's from the CME. It is market by order, which means they're tagged. Don't forget, we got a couple of things here. We got special Black Friday offers. In the U.S., we're having Thanksgiving. By the way, I will not be streaming on Friday. I'm going to miss all of you, but it's a great time for you to come to Bookmap Discord Trader Lab community. I believe there's a half day of RTH. It's a great day to go into the rummage around in the library. If you haven't come to Trader Lab, there's those 60 PDFs, trade plans that other traders have posted. Statistics are available that I refer to every day in the stream. All that's available at no cost, plus the Trader Lab community. But you better come back for Black Friday if you want to get your hands on Bookmap and save dough. And what does it say? A dollar saved is a dollar earned. The other part of this is we have our Blue Jacket competition. This is the Bookmap Academy, which offers coaching and mentoring for traders. And this is open, for everybody. And you could submit your trade, PDF, just like the 60 PDFs I have, but something, more specific because I did a smorgasbord in there. You can get 3 months of Global Plus with stocks or futures data, a month of Discord, and guess what? One-on-one coaching session with me. And this is where we can really dig in and get under the hood and talk about your issues, your obstacles, and I can offer you potential solutions. I do offer coaching from time to time to traders in Trader Lab and elsewhere, but I do it on a very limited basis. And I always try to help traders. The Trader Lab's about helping traders. It's not about me. It's about you. It's not about replicating what I do. That's not how you become a successful trader, in my opinion. It's about understand how the market works, why it does what it does, how you get in alignment, and then you adjust it, the time frames and fractals to your psychology. Hope you got something out of it today. Please give a thumb up in YouTube. If you're interested in visiting Trader Lab, use the link down there. There is no cost. Download the 60 PDFs. Access the community. It's a great community. It's for serious traders. It's not romper room. And it's an opportunity, I think, for you guys to get a taste of the real world of trading. Also, you can win the Blue Jacket this month. Go to the Bookmap Academy. You can still register for it. It's coaching, mentoring with other traders. Get a lot of input. It can help you improve your game. And, of course, one-on-one coaching with me. I've never offered this before. I don't know if I'll do it again because of my limited time availability. but I think it's something you might benefit from. Either way, 3 months of Global Plus. What's wrong with that? Thanks again, guys. Please remember to give the thumb up on the way out. Helps the stream, and subscribe to it so you receive notifications of other streamers and myself. This way, you'll always be in tune. Thanks again, guys. Be well. Look forward to seeing you soon. And don't forget, I will not be streaming on Friday. And I'll see you all in the Trader Lab, and I look forward to seeing you tomorrow. Have a great day.